why the Fed wants to buy stocks. Hello and welcome to Smaulgld's. In case you missed it, top gold and silver stories for the week ended October 1st, 2016. This week I did not produce one blog post. I was very busy just keeping up with all of the news this week, which I will summarize for you in this podcast and blog post. The Fed launches another interest rate big yak attack, the most talked about rate hike in history when jawboning isn't enough. Yellen discusses the possibility of the Fed buying stocks. What does this mean for gold? We'll be covering these topics. Yellen was attacked on Capitol Hill during her testimony for being political. Trump also attacked her again and the Fed's independence during the debate. CNN countered that the Fed was independent. Gold sales at the retail level are surging while silver sales are flat. That is a trend that I had predicted last month would start and has started and has continued. And European banks, Deutsche Bank, Commerce Bank, Italian banks, all are in trouble and all made the news this week. So let's get at what happened during the week. The top story of the week was the debates. Trump was on the defensive, but for matters that don't matter. 1972 lawsuit, tax returns, calling a woman fat, which turns out he really didn't. On Fed politics, he called it a bubble, the current economy. He did hit Miss Clinton on the 33,000 emails she deleted. As it turns out, though, there were a lot of people who thought that the debates themselves were rigged and that Lester Holt, the the moderator, interrupted Trump many times during the debate, did no such interruptions of Miss Clinton, no fact checking, no difficult questions of Miss Clinton at all. And also it appears that her podium was different than Mr. Trump's, that there had been some kind of box retrieved at the end of the debate by some mysterious gentleman, and that Miss Clinton may have had the questions in advance. And also the big interesting thing that came out was during the debate many people noticed that Donald Trump was sniffing, and this sounded like it was almost, well, we think that Miss Clinton is sick, but look at Trump, he's the one up there sniffing. As it turns out, that sniffing sound was a result of what the debate commission admitted was due to a faulty microphone. In any event, those were the debates. I didn't take away much from them other than they weren't very substantive and that Miss Clinton managed to stand on her feet for the entire 90 minutes. She actually didn't look bad during the debates. She looks bad in other public appearances. She looked bad in subsequent public appearances. She had those coughing fits, but she managed to hold her own during the debate, stand up and not cough and not look like she was ready to pass out as she normally does in most of her debates, and her eyes were not cross-eyed either. Top economic stories of the week, we'll get to them. The Deutsche Bank Fed chatter about interest rates and equity purchases. Now, if you're not a Smaulgld subscriber, I remind you to sign up. You can do it now. You go to the Smaulgld website, you go up to the top, you just fill in your email. It's free, and also you will get a special report, a 12 differences between gold and silver special report that may give you some insight into why silver and gold are priced the way they are, or it may just be of interest to you. But in any event, you fill in your email address there for free. You get that report, and you also get to stay in touch because you never know when this channel or it gets taken down, or who knows what the future holds in store for the internet. At least if you have an email, there's ways of corresponding and getting information out. Let's see what happened during the week. So gold and silver both closed down. Gold closed at $1,300 and $1,315.80. It was down about 1.6%. Silver closed the week at $19.15. That was down about 2.5%. The gold silver ratio ended the week at 68.72. If you're interested in the gold silver ratio, you click here. There are historic charts on the gold silver ratio. Also, I did a podcast on why the gold silver ratio may not ever go back down to its quote historic ratio. I'm not going to cover that today, but again, it's something you could check out at smaulgld.com or at the YouTube channel. Chart of the week. Silver ETF demand continues to climb. Now, silver in ETFs, unlike gold in ETFs, never really lost any of its, at least according to what they report, it never lost any of its holdings, and they started to accelerate again in January this year and have continued to climb. Unlike the Silver Eagle sales, the sales of silver kangaroos at the Perth Mint, those sales have been down the last 3 months, and it highlights that Western demand in many respects is for paper products like these ETFs. As you can see, the demand for silver ETFs is higher. The gold ETF chart shows the same thing. But there is a change now in that gold retail sales are on the up and silver retail sales remain down. Be interested in hearing your comments. You can leave them on the YouTube channel. You can leave them on the Smaulgld channel as to why gold sales are up, silver sales are down or flat. My feeling is that when you head into what is a potential fear trade, people are concerned about the economy, people are concerned about central bank control, people are uncertain about the election, whatever it is, gold is the first metal people go to. And I think that's indicative of what's happening right now. Could be wrong. You can leave your comments below. If you're interested in purchasing gold or silver, please consider purchasing it through the Smaulgld.com website. As I get a small commission, I offer a variety of affiliates that you can choose from where you can price your products, price the shipping, and make your selection. If you do purchase from Smaulgld, I do get a commission, but you pay no more than you would if you went to these websites directly. All right, let's get through the stories. September 26th, the week starts. We have a Bloomberg story that the biggest buyers of U.S. Treasuries are selling like never before. Now, we've been covering de-dollarization here at Smaulgld for a while. If you're interested in finding out how many U.S. Treasuries are held by foreign countries, you just go up to the top, click on economics, click on scroll over economics, and then you can see top foreign holders of U.S. Treasury bonds. I update that every month. You can see historically which countries have held the most Treasury bonds, which countries are adding, which countries are taking away or selling their Treasury bonds. Just a very interesting, if you're interested in coin collecting, the U.S. plans another series of dollar coins. People don't even know that the United States has produced hundreds of millions of these dollar coins with the presidents on them. No one uses them. They even stopped producing them for circulation. I think they were doing a series from George Washington all the way through to, it might even be Obama. And they stopped producing them for general circulation around, I want to say it's Franklin Roosevelt. But in any event, the coins are such a dud, I don't know why they're going to produce more of them. I'm happy that they are because they are a form of cash. And in a way, they're not Federal Reserve notes. They're dollar coins. So they are worth $1. At least they're not a debt-based dollar. And they're not worth $1 worth of metal. They're worth about 7 or 8 cents at the most because they're copper nickel clad. But the U.S. is still forging ahead and going to produce these new dollar coins. Economic data, new home sales. Again, they were okay, but when you consider that they're still at levels last seen in the 1960s and 70s, they're up from where they were, but they're still not very robust or solid. As you can see, Dallas Manufacturing Index, Business Index down. So this whole concept of a recovery, you wouldn't have these negative Fed indexes being down if there was a real solid and robust recovery. Russia ShareBank becomes a member of the Shanghai Gold Exchange. You can click on that. You can just see we reported last week that Russia is going to be selling gold to China. So there is a correlation or an agreement between Russia and China to get more gold from Russia into China because Russia is one of the largest gold producing nations. China is too, but China needs more gold than Russia just because it's a larger country. Gold price hits record high. You didn't know that. Well, in Burma, because the Burmese currency is kind of crashed, and that has pushed the value of gold higher. And that's an important lesson, is that you don't just look at the price of gold in dollar terms, but look at it in terms of foreign currencies. And if you think that the US dollar at some point will take a nosedive, well, that just means that the value of gold relative to the dollar will rise. The Texas Gold Depository, there's a story there you can click on, and you can see they are going to break ground on the Texas Gold Depository, which will be a place where not just the Texas government will keep gold, but individuals can store their gold at a state-run facility. Not sure that's the greatest thing, but it shows the value that at least state legislatures are placing on gold. De-dollarization, what do we got here? Let me just scroll up a bit, sorry about that. Yeah, United Arab Emirates and China trade receives fresh momentum because they're going to start doing direct yuan trading. So there's another case they're popping up here and there where other countries will accept things other than dollars, or accept currencies other than dollars in international trade. But one thing, it is slightly overhyped. I think eventually there will be a greater and greater percentage of foreign currencies, including the yuan, in foreign trade. But the yuan right now is still under 3% of total foreign transactions, although they have boosted their presence in the yuan. But remember, the yuan has similar issues to the dollar. It's still it's a fiat currency, and it is also subject to the same type of QE programs that the dollar is. So, and currently China is not backing its yuan by gold. Its reserves as a gold as a percentage of reserves of China's on the Chinese central bank is only 2.2%. Even if they include all the gold in China, it's still only be about 10%. So while I believe that there will be a move away from the dollar, this concept that somehow the dollar's days are numbered in the single digits is not true. There's going to be a long slog between the changing of the guard between the dollar and other currencies. And also keep in mind that China has $1.4 trillion in US treasuries, and it's not looking to create the type of waves to displace the dollar, because that would also be biting their nose to spite their face, because they would lose enormous value. So de-dollarization is occurring, but is not occurring at rapid speed. It is occurring at a very gradual pace, and we'll see how all that goes. And that may change depending on who becomes president, depending on U.S. foreign policy, depending on Chinese policy. We don't know. Nothing is written in stone, and we'll just have to keep tracking it as we do. Here's another one. Richmond Fed manufacturing survey, negative, just like the one we saw above. Although consumer confidence is up, but I never thought that consumers were the best indicator of the health of an economy. You could probably go back to 1929 and ask people how they felt about the economy in August and September of that year, and they probably would have thought things were just grand. So consumer confidence, I think, is a lagging indicator. Right now, the stock market's high. It depends on who you ask. Depends on how they report the numbers. But in any event, I don't pay much attention to consumer confidence. I pay more attention to what consumers are doing, what they're spending, whether consumers are getting jobs, whether they're saving, and so on. Home prices, though, continue to rise, not home sales, but home prices. Here's one I found very interesting, and you guys could check it out, is grocery prices are plunging. This is Bloomberg. Take that for what it's worth. Supermarket staples are incredibly cheap right now. That doesn't pass my own experience. Maybe it doesn't jibe with your experience. I know I've seen certain items like milk going up 20 cents about 6 months ago, went up another 20 cents a gallon in my supermarket. Certain canned goods, I know because I buy them every week, have gone from 79 and 99 cents to $1.19. I've seen that. Now, again, I haven't done a basket of groceries and track them, but I find it hard to believe that grocery prices are plunging. Interesting. How did Roman coins get from the 4th century all the way to a castle in Japan? I'm not going to cover that. You take a look. Fed chatter. Now, there's speculation that Yellen might quit if Trump wins. That would be interesting. I don't know if that's going to happen, whether Trump will win. I also don't know if he wins, whether Yellen would just decide she's getting out of there. But I suppose if the Fed is political, Trump will be on the phone all the time harassing Janet Yellen to do what he wants to be done. And then I think she'd have an excuse to resign, saying that she no longer has her independence. U.S. Mint sales update. Not going to go through all the updates that happened during the week. Later this week, probably tomorrow, I will release or they're already released by the U.S. Mint, but I will have an analysis of the U.S. Silver Eagle, Gold Eagle, and American Gold Buffalo sales, and you will see quite clearly that the gold sales have really started to accelerate, and the silver sales, while they're better than they were in August and July, are still pretty tepid, especially by recent historic standards. There's your plug here. If you want to buy coins, you can buy them through Smaulgld's website. As we saw at the top with the ETF silver chart, silver ETF assets soared a record, buoyed by industrial use bets. That's speculation. No one knows why people, every time they purchase an ETF, why they're buying them. Just like no one knows why people buy anything, but they're trying to make out, I believe it's because they're trying to make out that, this is Bloomberg, that silver is valuable for its industrial, not for its monetary, not for its investment value, but that somehow it's an industrial metal. And it is an industrial metal, but more and more in the last 10 years, a greater percentage of silver's demand has been for coins and bars, which is the investment demand. It's gone from 5% in 2005 all the way up to about 25% last year. In fact, I read that industrial demand is actually down 4% over the last 12 months. And that makes sense. If the economies aren't doing as well, then you can't expect the industrial silver demand to be rising. What's really boosting silver demand is people buying sovereign mint coins and privately minted silver bars and rounds. Gold, Chinese company is the top bidder for Glencore mine in Kazakhstan. No surprise there. China is already the largest producer of gold in the world, with about 450 metric tons produced a year. But that doesn't include the mines that China owns outside of China, in Kazakhstan and in Africa. Now here's an interesting one. This one came from Reuters. Russian central bank says has no aim to raise its gold share reserve percentage. That's very misleading, because what I wrote, we don't mean to, it just happens. Russia has been adding gold at the fastest pace of any central bank in the world. They may not be aiming to increase their gold to a certain percentage of reserves, but they are. It's over 13% now. And there's another story out this week, and I didn't need to read the story to know this because I've been tracking their gold purchases every month. But you can do the same at Smaulgld just by going up to the gold column here, going down to gold reserves, clicking on Russia and gold, and you will see the gold purchases made by Russia every month. But in any event, those gold purchases that they make each and every month are putting them on a path to go to about 200 tons this year. Last year, they bought about 215 tons. So the statement by Reuters that somehow they have a statement, they're trying to undercut the fact that Russia's buying a lot of gold. Russia's not denying they're buying a lot of gold. They are buying a lot of gold. And here's the quote here from Russia. We are a country that is third in the world in terms of gold production. They're behind Australia. And we have the opportunity to buy it using our national currency. You turn those rubles into gold. Very simple, very good idea. You have rubles, they've gone down in value, use them to buy your own gold production and then sell the excess to China. Great work. Bank of Russia will buy about 200 tons of gold this year to replenish its gold reserves after buying 206 tons in 2015. U.S. economic data. Here you go. Durable goods, flat. They expected them to be down. Defense capital goods, new orders, they were up. Okay, so Reuters calls this a positive signal for the business investment outlook. No, it's not. It's down year over year. It's been down 20 months in a row. The fact that the durable goods are down is not a positive signal, but we know where Reuters stands on all this. All right, let's get to, again, the next big Fed yak attack. They never stop with this. Fed had its meeting September 20th, 21st. There had been a yak attack leading up to that meeting that they were going to raise rates. It was on the table. Look out. Conditions are right. It's appropriate to raise rates. All the talk, all the buzzwords, and then they don't raise rates. Well, they're not just content to say they didn't raise rates, and they probably won't raise rates. Actually, I think now they will raise rates. I predicted last year after they raised rates, which I predicted they would do just once, and they did. And everybody else was saying, they never raise rates, they can't raise rates. No, they did. Then I said, after they raised rates, when the Fed was going on and on about how they're going to raise rates 4 to 6 times, I said, no, they're not going to do that either. They'll do one. They'll talk about it all year, like they've done, but they'll only probably do it once. In any event, if you look what happened, we've had 6 meetings so far. There's only 2 left, and they said they were going to do 4 to 6 rate hikes, so that's impossible unless they're going to raise rates twice at each meeting, which you can't do. So here's what happened, though, last week. You had all these Fed presidents come out. San Francisco Fed president. This is the guy who said mid this year, I mean, that we'd have 4 rate hikes this year. If you want to, you can prove it right here. You click on that link. Here's what he's yakking about 4 rate hikes would be appropriate. Yeah, then why didn't you vote for them? He didn't vote for them in September. Oh, I would support an interest rate increase. U.S. economy can handle a rate hike. U.S. economy can handle a rate hike. But Mr. Williams, you never raised rates. You never voted for it. So and then he says, well, when they ask him, well, you're losing credibility, he says an easy way to convince markets of something is by doing it. Okay, that's a self-evident statement, but hasn't been done. Janet Yellen. Now, she was the one, their own internal projections at the end of 2015 was that they'd raise rates 4 times in 2016. This is 15. And then basically at the end of March, she said, well, we're going to raise rates. Maybe the projections are twice this year. Okay. And then in May, we think we're going to raise rates in June. And then in August, the case for September strengthens. Then she's on Congress this week, testifying, saying rate hikes are appropriate. Yeah, they're always appropriate, but they never happen. There's no fixed timetable, but the economy is ready for a rate hike this year. Yeah, okay, it's been ready. This is according to the Fed. It's been ready. It's not like the conditions have not warranted or have not been appropriate or for the possibility of a rate hike. They've been saying all year that they are, but they just don't get around to doing it. Now, the ridiculous thing she said was that the economy might overheat. I don't know where they get that from. She also fumbled on her answer to the labor participation rate. If you want to see her kind of shuffling through her papers, someone asked her what the labor force participation rate was, and she didn't know. And so if you click on the link that I provided, you can see it's right there. St. Louis Fed President Bullard, in March, he says, we're going to have rate hikes in April. And then in June, he comes out and says, we may only need 1 rate hike through 2018. But then in August, he says, but September might be the time we raise rates. So what Bullard has done is, because he's put out his marker that we only need 1 rate hike to 2018, he can be part of the chorus every time there's a meeting coming up that he could say, well, the next one is a good time. So he can always be the guy, the one that they can always add to the rate hike might happen this month because he's promised a rate hike. He thinks we need one, and this next meeting could be the time. Chicago Fed president, same kind of thing. In August, he says 1 rate hike may be appropriate this year after promising 4. So that means they're on the table in November and December, according to Bullard and Evans. Even though they're dovish on rate hikes, when they start talking about rate hikes, they're always on the table because at least these 2 guys always see the possibility for a rate hike at the next meeting. Now, this Cash Carey guy says it was the right thing to do. He's a Minneapolis Fed president. But then Meister, she actually voted, I believe, against the policy, and she wanted to raise rates in September. And she said it's the appropriate time to raise rates. We need to do it now. Okay, so she's pounding the table for rate hikes. Same with Esther George. It's time to remove some accommodation. But it never, ever, ever happens. Now, why do they do this rate hike talk? I mean, they're losing credibility. Here's what I wrote at December 2015. All year we said the Federal Reserve would raise rates at the end of the year to stay ahead of the other central banks, which were negative interest rates, and to boost demand for U.S. Treasuries, which this was in December of 2015, to yesterday's Treasury reports, are clearly in decline. And as we saw at the top of the broadcast today, they're even lower. So people, foreign entities are selling U.S. treasuries. One of the advantages of U.S. treasuries, despite the selling, is they actually have a positive interest rate. So when the Fed yaks about a interest rate, they're trying to protect the dollar. They're trying to keep the dollar up, because if they just come out and say we're not raising rates and there's no way we're going to raise rates, the U.S. economy isn't good, then the the U.S. treasuries are no better than any other treasuries. They got no interest rates. The U.S. economy is weak, so they have to put this pretense out there that they're going to raise rates because the U.S. economy is strong. And I mentioned that the Fed's policy is not about protecting the too big to fail bank, the economy, the stock market, or the job market. Those are all considerations. But the Fed's primary objective is to protect the U.S. Treasury and its ability to sell Treasury bonds. What's next? This is what I wrote at the end of 2015 in December. We believe the Fed will continue to push the concept that they are on a rate hike path, data dependent of course, because the economy is improving and that job gains will eventually boost consumer spending and inflation. Having gained credibility for raising rates, Ms. Yellen and Fed officials will talk about another rate hike for months, sending conflicting signals that they might raise rates, might not raise rates, or might lower rates. The Fed won't throw in the towel and reverse course until either the data clearly indicates a recession or another financial crisis occurs. And that's exactly what's happened this year. We've heard the conflicting back and forth talk. Remember when the stock market fell, they started talking about lowering rates again. So the Fed tries to control things through yakking. That's not really going to work. You can also see here, there's a blog post and a podcast here that talks about how the Fed will not sacrifice the dollar to save the markets. Basically, what they'll do is they will always look at the dollar index as to whether they raise or lower interest rates. But an added thing that they will do to save markets is what came up in Yellen's testimony about buying equities. That's where the Fed will want to have its cake and eat it too and control markets. They won't necessarily lower rates. They can keep rates or even do a rate hike to keep the dollar strong. But then if the stock market crashes, they can buy equities. And that looks like what's on the table. So Yellen was on Capitol Hill, and she's getting grilled about this Laird Brainard woman who's a Fed governor who's donating money left and right to the Clinton campaign. And this Congressman Mick Mulvaney says, isn't this a conflict? Oh, no, this isn't Mick Mulvaney I'm talking about here. There was a congressman who was from New Jersey, and it was haranguing Miss Yellen about the Laird I don't know what her name is. It's Miss Brainerd. And he thought it was a conflict that she was donating money to the Clinton campaign and also trying to secure a job in the Clinton administration. And Miss Yellen tried to say that it wasn't a conflict and everything was fine. Okay. But anyway, the more important issue, not that that's a very important issue, because it does appear to be a conflict of interest. It does appear, and she was the one who came out last Monday and said, no, we probably won't raise rates in September, and that saved the stock market. But in any event, a congressman from South Carolina asked Yellen whether the Fed might buy stocks. Now, would be unheard of. There's no reason for a central bank to be buying stocks other than they want to play market manipulator, and they want to basically control the market, and they want to pick winners and losers, and eventually they want to own the companies because that's what it is when you buy equities. You're buying a stake in the company. She said there's been some attention in the last few months about the recent decision by the Bank of Japan to start purchasing equities. That's not recent. They've been doing that for a long time. So has the Swiss National Bank's been doing it for about 8 or 9 years. And Smaulgld had reported on not just that the Swiss National Bank was buying equities, but that it was also buying, for the last couple of years at least, mining shares, gold and silver mining shares. And she says, well, this was the guy's question, was that the Bank of Japan had just started purchasing equities. Just shows how out of touch he is, because they've been buying them from a long time. And so have the Swiss National Bank. He says to her, is the United States Federal Reserve looking at the possibility of adding the purchase of equities to its toolbox as it looks at monetary policies? And you would think, don't give her any ideas, but of course, she's already got those ideas. In fact, at Jackson Hole last month, she said, and we reported on this, and most people miss this, she said that future policymakers may wish to consider expanding the types of assets that it buys if we need to do another 2 trillion, 4 trillion QE, and that may require legislation. So I read that and I immediately thought, what other assets could they buy that would require legislation? Because they can only buy, right now, they only buy or only bought U.S. Treasuries and mortgage-backed securities. She says, well, the Federal Reserve is not permitted to purchase equity. She's fully aware of that. We can only purchase U.S. Treasuries and agency securities. I did mention in the speech in Jackson Hole, though, where I discussed longer term issues, which is the paragraph I'm talking about, and difficulties we could have in providing adequate monetary policy. Stop right there. See, she views monetary policy is basically fixing everything that could possibly go wrong in the economy, in markets, and so on. It's not. And they should never have that power. The Fed should only be, they don't even think she should be setting interest rates. But in any event, she feels that they can't conduct adequate monetary policy, that they're restrained because they can't go and buy shares. She says accommodation may be somewhere in the future down the line. That is the kind of thing Congress might consider. Basically, and she says, but if you were to do so, it's not something that the Federal Reserve is asking for. Almost basically saying, look, why don't you guys start thinking about this, because we're thinking about it. We haven't asked for it yet. Why don't you just consider it? And so this way we don't have to ask for it. Hint, hint. And of course, by doing that, what the Fed would be accomplishing is they could do pre-bailouts. One of the things is they can prop up. There's this kind of question, as I mentioned earlier, between what the Fed wants to do to keep the dollar up, but then they know if they raise rates, then the stock market goes down. Well, the way to fix that is they can raise rates, keep the dollar strong, and keep the demand for treasury strong because it pays interest. And then to offset the fact that the price of shares may fall, well, they have a mandate. They can buy those companies and ensure that the U.S. stock market is always safe, is backstopped by Fed buying. Now, what does that mean for gold? It's not a good thing, because if they now can say we can raise rates, which is not good for gold, at least as long as if the rates go higher than the inflation rate, that's definitely not good for gold. But even just the perception is that even if the Fed raises rates a bit, that's not good for gold. But when the last time they raised rates, the stock market fell and then gold rose because it became a more attractive asset in light of declining equities. However, if the Fed decides they're going to buy stocks too, well, guess what asset now has a floor under it, and which is the preferred asset? Stocks, not gold. So that's a very, but there's many other reasons to be against the Fed buying equities. And I went through a lot of this on my interview with Dave on the X22 Spotlight, which you can find on Smaulgld, or also just going directly to X22 Spotlight. But the real danger, besides all the other parade of horribles of total control of the stock market, total control over companies and their policies, if it gets to a level where they continue to buy shares, is basically they're marginalizing gold. They're basically saying that gold has its own market, but we're not buying it. In fact, they'll buy the mining shares, but they won't buy the gold. So it looks like the Fed is looking for that approval. They don't want it now, but I think if the stock market were to fall, they would be asking Congress to approve their right to buy shares. So why wouldn't they? Look, the stock market goes down. There goes their story of recovery. If they can boost the stock market back up, they could say the economy is doing well. I also reported on the CME Group has a foreign central bank discount for foreign central banks that also want to not just buy stocks directly, but want to buy futures and futures contracts on the COMEX, the NYMEX, and other exchanges that they run. They get a discount. So I'm sure part and parcel of the Fed's manipulation of markets, if they're going to buy equity securities, certainly they would also buy and be engaged in the futures markets as well. I spent a lot of time listening to, I'm not going to report on it here, James Comey's testimony to the Congress. He was grilled even more than Janet Yellen. But the reason I kind of fascinated by it is there's a lot of hostility towards Miss Yellen in the Fed, and a lot of this has to do, I think, with Trump and with the general feeling of many Americans that the systems are rigged because the deference was not there for Miss Yellen. The deference certainly wasn't there for Mr. Comey. In fact, he was on such a defensive during his questions to why he was handing out immunity. Why couldn't he just subpoena the documents or the hardware, the phones, the computers that he wanted without having to give out immunity? And one congressman told Comey he blew it, and many were asking questions. It's almost to the point of saying you rigged this whole thing. You never intended to make a recommendation to indict Miss Clinton. And you could see he was on the defensive. And the most interesting thing was he said, you can call us this or that, but you can't call us weasels. And no one called him or anyone on the FBI weasel. So obviously they had gotten to him. Not that it means anything, not that he's going to change his position, not that they're now going to aggressively chase after Miss Clinton and what she might have done with the mishandling of classified information. But you can tell he was definitely rattled by the questioning he received. But questioning is questioning, and the questioning is over, and he's back to being the FBI director. The U.S. economic data, the second quarter GDP was revised up to 1.4%. And GDP is supposed to give you a sense of the health of the growth of the economy, but that surge, the little extra that went from 1.1, the second estimate, to 1.4, the third estimate, was based on people spending on healthcare, housing, and utilities. So when you pay more for your electric bill, you pay more for your housing or rent or your healthcare, they count that as positive things because people are spending money. Well, that's money that you don't want to spend. That's money that takes away from your standard of living. If you have to spend more on healthcare, housing, rent, and your utilities, you're not doing better, you're doing worse. So basically, you could double utility bills, double your rent, and then tell everybody the economy is booming. So that's the mistake of the GDP. Commerce Bank announced a 20% reduction of their workforce. The Deutsche Bank seems to be in trouble. Of course, all the media stories say they're not. This is not a repeat of Lehman. Everything is fine. Plenty of official denials. Here's a story: gold bulls feeling frayed, and this is a Bloomberg story. And the concept there is that gold bulls felt like, well, the gold price went up for 6 months, and now it's not going any higher. So, now they're frayed, and now they're just going to throw in the towel. Never see stock stories about stocks in that fashion. Stock prices go up 3 months, they take a breather. Now people don't want to buy stocks anymore. What they're trying to present is the concept that gold's run is over, so now you don't want to buy gold anymore. Not that gold is a asset that people wanted for 5,000 years. No, it's a gold people want. It's a gold. It's a asset that people wanted for like 3 or 4 months in sometime in 2016, but they don't want it anymore. Now here's where I mentioned the declining silver demand. Yes, there is a decline in industrial demand, but there is still a robust demand for investment, although it's down in India this year. And as we see slowing sales in the U.S. Mint, they're at about 31 million sales of American Silver Eagles. They won't come close to 40 million, and they will not come close to the 47 million Silver Eagles that were sold last year. Here you see these Fed guys yakking. Harker, December rate hike is appropriate on the current trajectory. This guy in Atlanta says that he wants to see more improvement before raising rates. But of course, he'd always consider raising rates. Now, as to the Fed not being independent, that's a charge by Donald Trump and some congressmen. It wasn't just Donald Trump acting as an outlier. And Arthur Burns, who was a Fed president under Nixon in the 70s, he clearly noted that there is some political nature to the job, even though they try to claim they're independent. But CNN, you really want to see this video. this woman who supposedly is a Fed expert, and I don't think she is at all, but she goes through why almost it's preposterous to think that the Fed isn't independent. You can click there and watch a short video on CNN propaganda saying that the Fed is an independent entity, always has been, always will be. And now, secret Alpine gold vaults are the new Swiss bank accounts. Here's another reason people haven't considered why gold is preferred over silver, especially as a storage of wealth. For people like us who don't have a lot of wealth, then storage is not an issue. But if you have millions, tens of millions of dollars, you really don't want it in silver. Why? It takes up 80 times the space. So your storage costs are a lot higher. I don't think people fully recognize that. When the gold silver ratio is 77 to 1, that means the equal amount of money that you have to invest means you of gold or silver, you have to take up 77, 67, whatever is times the amount of gold, and that's going to raise your storage costs. So it's a lot easier to store gold in these Alpine vaults. Remember, space is limited. I mean, you can if you're a rich person and you've got like a box, maybe a 4x4 box, you have tens of millions of dollars worth of gold in that box. You really can't fit that much silver. You know, you can fit a lot of silver in the box, but it's not worth that much. It's worth 70, 80 times less. Not just Commerce Bank, Deutsche Bank, the bank in Italy, Pasca de wherever, the Dutch ABN AMRO Bank also says they're going to fire thousands. So the European banking area, European banking system seems to be under a lot of stress. And what's surprising is that it's coming out of Germany. People expect Italian banks, Spanish banks, Greek banks to have these issues. In fact, Greece issued something like that the German bank troubles aren't going to impact it. Okay. The fact that Germany, the heart of Europe, is having the problems is quite distressing. Now, there was a rumor out, I don't know if it's been confirmed. One of the reasons that started this refocus on Deutsche Bank as a problem bank is the United States that they wanted them to pay $14 billion for some shenanigans that they had done. And that on Friday, there was a rumor that settlement offer had been reduced to $5.4 billion. So no big deal. And then Deutsche Bank reversed its downward trajectory in the stock market, and then the rest of the stock markets, they reversed too. Nothing to see here. Deutsche Bank's fine. They only have to pay a $5.4 billion fine, so everything is not a problem. But if you look at U.S. economic data, spending, which is, as we mentioned, 70% of the U.S. GDP, it's how they measure how well the United States is doing, not how much it produces, but how much it spends, was flat. So where's the growth? And if they're spending more money on housing, rent, I feel like, what's his name? Perry. Housing, rent, utilities, and healthcare, then that's not good spending. But that's what the U.S. economic data comes out, and yet somehow the Fed believes conditions are appropriate for rate hikes. Okay, now here's interesting. Atlanta Fed, third quarter projection for the GDP. They added a 3.8% a couple of months ago. Now that's ridiculous. They had first quarter and second quarter growth of 1%, 1.2%, averaging about 1% for the first two quarters, although it was revised to 1.4% in the second quarter. And they had the third quarter accelerating. Why? Just because they believe that's what should happen. That's what they want to happen. That's what they need to happen. That's what the narrative is. And they're now have been reducing their third quarter projections. And it's now down to 2.4%. It'll be in the 1% range shortly, and it'll probably come out in the 1% range. And yet the Fed will keep insisting that conditions are appropriate to raise rates. Economy is solid. No, it's not. And they keep saying next month, next quarter, it's going to get better or it's going to improve and so on. It's not. U.S. Mint sales updates. We're not going to go through that again. And that wraps it up for the week. Thanks again for listening. Please remember to subscribe to Smaulgld. Fill your email in here. Also, please subscribe to this channel. And thanks for listening.